Hi, this is Matt, the financial planner. So today I'm coming at you with a new update. Some fresh news that just came out. Sears staff have just been told that they will be losing their jobs. The company will be going out of business, most likely before the end of the year. Over 12,000 workers most likely will be losing their jobs. From what I've read, there is limited access to severance pay. The employee benefits will cease as soon as they lose their job, and also the pension is severely underfunded. So there's a lot of big problems coming down for Sears workers in the next several months. A lot of them angry, frustrated, betrayed. It's just a terrible situation that, quite frankly, a lot of us could be in given any given moment. A lot of companies nowadays, it's becoming more and more tougher to find a company that's going to be there for the long run. It's difficult to find companies that are going to, for sure your job's not going to be taken over by automation or something along that line. So especially, it's not just for the highest paid or medium paid jobs. It's now coming down to almost all jobs will be affected by the whole automation changes. So what can you do? What can the average Canadian or the average person do to help prevent something like this happening, or to make sure that they're in a good place, so if something like this were to occur, they would have the ability to work themselves through it? So number one, as always, I definitely recommend having your emergency funds ready. If you're living paycheck to paycheck, you got to stop. You got to sit down, figure out a plan that's going to allow you to save up some money just in case something were like this were to happen to you, and then you'll be able to hold yourself over until you find that next opportunity. So in today's marketplace, I mean, it can take months, it can take years to find a job that's comparable to what you had previously. So it's always a great idea to make sure that you have those funds set aside to hold yourself over until you get there. If you have money in the RSPs and you're not working that much, it might be a good time to take that money out. Now, there's a couple ways that we can do this. Always getting the skills training to have the most up-to-date skills available to be able to get the jobs you need for the new market. The way things are going right now, everything seems to be going almost to a technological basis. So if you have technical skills, it's more likely that there will be jobs available for you. Whereas if you have service-based skills or soft skills, it's getting harder and harder to find those types of jobs. So number one, if you have your own business, if you are a business owner, if you are building a business, first of all, it's hard, very difficult to get into, costs a lot of money up front, very expensive to get going, but in the long run, it is definitely worth it. You don't have to worry about things like this because you are the business owner, and as automation comes in, it'll just allow you to implement those particular automation tools to be able to move on to the next thing. Now, of course, it's not easy to become a business owner. It's not easy whatsoever. It's very difficult. It could take you months, years, even a lifetime to be able to find your niche in the business world and be able to generate a business that earns funds. So keep that in mind. I always recommend work a job. If you try to set something up on the side, that's most likely your best bet. So that's number one. Make sure you have your funds set aside. Make sure your skills are up to date to be able to find that next job. Always look for a better job with more security, more pay, and better benefits, of course, to keep yourself growing in your career. But always make sure you have those funds set aside, so just in case something were to happen, you're good. So the way I always look at it, like, make as much money as you can, but live with as little as possible. So the lowest possible income that you can survive on, live on that, put the rest away into savings, investments, RSPs, pay down debts, and that way you can ensure that if something were to happen, you're going to be in the best position possible to weather the downturn. Now, let's look a little bit about why this happened to Sears. So Sears, it was a huge company, over 200 stores, tens of thousands of employees, and it's just been on a constant downturn ever since the internet. Of course, the internet has changed a lot of things. If you look at the biggest store in existence right now, it would have to be Amazon. So Amazon sells hundreds of millions of products. They're doing the majority of the internet transaction and sales through Amazon. However, the way it's going right now with Amazon is it's a disposition from what was a traditional retail chain. So the traditional retail chain, you had the supplier, you had the wholesaler, you had the retailer, and the end consumer. And each one of those sectors would mark up the prices. So you would find in retail stores, to cover the overhead, the customer experience, shopping, everything like that, they would have to charge quite a high premium over what the original supplier was charging for it. Now in 2017, we can take out the wholesaler, we can take out the retailer, and we can put suppliers' products directly in front of the marketplace through Amazon or eBay, which means, of course, that retailers, wholesalers really can't compete with the prices that are coming out on the eBays and the Amazons of the world. So it's in a Canadian economy where people are living paycheck to paycheck as well, people want to be able to pay the lowest possible price. So they're going to go to the biggest retailer, essentially, and be able to find some of the best prices without too much digging. So I'm sure you see it all the time where people are in the stores, they're checking out products on the store shelves, they see something they like, they immediately pick up their smartphone, they type in what they're looking at, find a better price on Amazon, order it, and it's at their house in a couple of days. So as long as you don't need it immediately, you can always find a better price through the internet because of that lack of overhead. So looking at it that way, a lot of companies will be in trouble in the next few years. It's not just Sears. Sears is losing over $1 million a day, or $1 million a day, but it's the companies that don't reinvent themselves on a regular basis that you're going to see getting closed down because of Amazon and eBays of the world. So that's really where it boils down to. You're going to see that in different jobs, industries all across the country. If you look at Uber and the self-driving cars, and even cooking is changing and will be changing over the next couple of years. You're going to see a more Uber type of business model. So a lot of these business models are changing and will be changing, which will mean less employees will be required, less employees, less jobs, but lower prices for all. So it's a give and take relationship, more or less. But that's basically my breakdown of the Sears bankruptcy and why it happened and what you can do to protect yourself. And as always, like, comment, subscribe. If you have any questions, leave it in the comments below, and we'll talk to you tomorrow.